Hello, and welcome to episode 6 of our podcast miniseries, Model Citizens, AI Compliance for Banks and Fintech Lenders, sponsored by our friends at FairPlay. Today's episode is the last episode in our series, and Kareem and I wanted to go out with a bang. And boy, did we. We brought on two incredible guests to talk about the future of AI, lending, and financial services regulation. Tom Brown is a longtime lawyer and investor in the financial services industry, currently serving as senior counsel at Paul Hastings. In over 3 decades, he has represented nearly every major company in the fintech space, as well as their founders and investors. PR Stark is the director of machine learning research at FinRegLab and a longtime advisor in the regulatory space, focusing on UDAP, risk management, and corporate governance, as well as an early employee at the CFPB. Honestly, I can't easily describe what this episode is about. We cover a wide range of topics and go down some really interesting and at times philosophical rabbit holes on the future of technology, government, and the economy. I was delighted, but not surprised, that this episode, by far our longest in the series, turned out this way. We didn't exactly plan for it, but I knew that Tom and PR would take us in some interesting and unexpected directions because, well, they are two of the smartest and most thoughtful folks I've ever interviewed on a podcast. It was a wonderful way to end our podcast miniseries, Model Citizens. I can't wait for you to listen, so let's dive in. Okay, well, Tom, PR, thank you so much for joining us.
You are welcome.
My pleasure.
It's great to have you. I wouldn't tell the other episodes this, but this is the one I've most been looking forward to, maybe, and it's both because you guys are fantastic guests, as I mentioned in the intro, exact right experiences to talk about really where we go from here and what the future of all this looks like. So, before we get into the big picture stuff, which we're going to spend most of today's episode on, I do want to start with a little bit more of a personal question as it relates to kind of the future, because the series is really built around AI. And when we say AI, what we're really talking about is like the cutting edge stuff that kind of has been obsessing everyone across every industry over the last couple of years with large language models and generative AI. So I'm curious for each of you if you could just give us one kind of personal anecdote, and this can be a specific use case for AI or a product that you've used or a demo that you've seen or a little kind of app that you've played around with. But like, what's one small part of what's happening with AI right now where you've kind of felt like almost sort of an out-of-body experience, like, wow, I just sort of touched the future there. And that's gonna be something that we're gonna have to deal with more over the next 10 years as we sort of get a grapple with this technology and get a handle on it. PR, I'll direct that question to you first, but Tom, I'd love for you to jump on that.
Thanks, Alex. I think for me, as a one-off moment of wonder about technology, riding in the back seat of a self-driving car for the first time, is maybe like, on the one hand, this is amazing. On the other hand, oh my God, does this work? But let me reach this for something that I think is more broadly applicable in terms of what AI is going to mean for all of us. For me, the potential of AI is really about its unbelievable power that it brings to discovery, its ability to iterate at massive scale and speed. And that's just going to supercharge our capacity for exploration, learning, and discovery. Those are the qualities or the essence of what differentiates a human being from other species. And so we have this incredible tool and potential to take those qualities to places we've never imagined before. I'll give you 2 examples that are ripped from the newspapers rather than a demo, both from the world of medical and life sciences. First, think about the work that got captured in the 2024, last year's Chemistry Nobel Prize. The researchers were cited for the creation and construction of spectacular proteins for the first time. And they used AI to solve a problem that was some 50 years in the works. And that use of AI expanded our capacity to predict and construct protein structures. So that opens the door to drugs, biosensors, vaccines, all kinds of things that have real impact on lifespan and health span. The second is the vaccine itself. It wasn't too long ago that we all sort of lived in lockdown and were reading the newspaper that it took 48 hours to sequence the roadmap for the COVID vaccine. Now, that's work that would have taken decades if done by humans. And yet, AI provided the literal roadmap to reopening the world and prevented all kinds of human suffering. Those things are amazing. That learning, that discovery, that supercharging sort of human curiosity and what we can do with it. So I guess that's what I would give you as my aha moments.
Those are great. Tom, what about
they're
you?
Much better than mine, Alex. But I'll start with the self-driving car, because I think every experience I've had in sort of interacting with a true generative AI experience sort of follows that self-driving car sort of path. There's you call it, you get in, you put your seatbelt on and go, and that first experience is astonishing. And then the second through nth is just the part of the lived reality. And I've seen this across a range of sort of what we'll call applications. So I remember going to a demo at HF0, which is a hacker house here in SF and Incubator. It's a residency program. And some really interesting companies have come out of it. One of the batches a couple of years ago sort of revolved entirely around AI. And I remember seeing my first sort of AI generated animation content. And you're like, wow, like that. And this is probably 2-3 years ago. And you're sort of thinking about the rapid acceleration to the development of sort of high quality video imaging. And then Kareem demoed something at an event I was at this weekend, and I'll let him talk about it if he wants to, or if not. But it depicted sort of two very prominent public figures discussing something that would have real market moving effect, and the vividness of that. Of those videos was astonishing and surprising. And I think if you talk with specialists in any field, you'll get some version of that. I mean, to sort of tie it back to something entirely prosaic, I'm now back practicing law. A thing that I have to spend time doing is sort of systematic research, either of case law or of statutory law. If you know the output that you want and you provide an instruction to AI, you can generate that output instantaneously. Now, you still have to check the work, right? Like, so if you want to do a complicated 50-state survey on, for example, what are the licensing and regulatory requirements for premium finance? An obscure, but I think fascinating part of the credit market, like it'll do that for you in 60 seconds. Like, and that's work that would have taken days, not long ago. I think to PR's point, the capacity for exploration and discovery using AI is just amazing.
Yeah, no, I completely agree. And building on that point, Kareem, I'm going to sort of ambush you. I'd love you to answer this same question, and maybe you can elaborate on the example that Tom gave as well. But like, what's been your observation? Because I completely agree with both Tom and PR on kind of like the moments of surprise, and not only that, but like fitting across every industry and everyone you talk to. It seems like everyone has one of these.
Yeah, well, we have been working at FairPlay for the last several years to apply some of these novel AI training techniques in unexpected use cases. And several years ago, my co-founder, John, who's a bona fide AI pioneer and spent many years at Google and before that, many years at Microsoft building AI systems, started experimenting with adversarial networks. And one of the things that we've done in our day jobs is to apply adversarial networks to credit underwriting models. Adversarial networks, for the audience who may not be aware, are a kind of training technique that effectively pit two different AIs against each other in a kind of joint optimization effort. So the best way to explain, or one of the good ways to explain an adversarial network is, imagine you have a cop and a counterfeiter, and the cop is trying to catch counterfeit bills. And so let's say the counterfeiter, takes inputs like paper and ink and a typeface and attempts to construct a bill and get it past the cop. And the cop kind of can identify the bill as a counterfeit and rejects it. And so the counterfeiter goes back into the laboratory, adjusts the ink, adjusts the paper, adjusts the typeface, tries to pass another bill by the cop. Maybe at the second round, the cop catches it again, but they go back and forth in this kind of cat and mouse type iterative process and arrive at a point where the counterfeiter is generating bills that look virtually identical to real fiat currency. And so we have been applying that both to credit models, but also in some other applications. And the one that Tom was referencing is adversarial networks are the key methodology underpinning deepfakes. And we have been very, very concerned that deepfakes are a prelude to a kind of synthetic reality. Sam Altman made comments that are kind of consistent with this a few days ago when he told the banking industry that their methods for doing identity verification were totally inadequately suited to this new era of synthetic reality, of synthetic humans, of deepfakes, which attempt to impersonate consumers. And so we kind of asked ourselves, what risks do deepfakes potentially present to the banking system? And what we found is that for not very much time and money, we think we could create deepfakes that might prompt a run on the banking system by questioning the liquidity of a major financial institution in a way that also is designed to be amplified by AI agents on doppelganger websites. And our conclusion is that for about $5,000 and a week worth of work, we could probably generate a run on the banking system using deepfakes designed to impersonate the president, designed to impersonate the head of a major financial institution. So we think this is a risk, a potentially existential risk to the banking system that regulators are completely unprepared for.
Well, it's interesting because kind of based on that point, and I want to get into all of this because it's kind of talking about the future. I do want to sort of level set and would be curious, Tom and PR, for your takes on this, both sort of where this technology at its current place, and obviously it's evolving on a daily basis. I feel like every time I look up, there's a new model. People are like, oh, you should really be using this model, not this one. I'm like, okay, I'll keep trying to keep up with all of the improvements here. But at the moment, one of the things I find so challenging about this stuff is there are areas where these models are extraordinarily capable, and we might actually be underestimating like what they can do or what value they might provide. And at the same time, you'll also stumble upon things where it'll screw up in the most remarkably mundane and sort of pathetic ways. And you're like, really? You can't do this? I play Hangman with large language models, and they suck at Hangman. I'm not sure why. It's just like that. They're not able to solve for that yet. So I guess I'm curious for each one of you to kind of outline what's an area where you think LLMs and generative AI is maybe a little overrated, and then what's an area where you think they might be a little underrated based on what they can do right now. And PR, I'll go to you first on this.
Great, thank you. So on the question of where AI is a little bit overhyped at the moment, and there's sure a lot of AI hype in every arena these days, I think I would call out autonomous AI agents, truly autonomous agents. There's all this dystopian, somewhat interesting sort of depiction of the future in which we send bots out to date for us and do surgery on us and other things. And I think in the current state, I'm not sure we are in a place where it's realistic in the near term, where we're going to have the infrastructure for safe, reliable, multi-step decision making that really falls into that autonomous action bucket. I'm not saying never, but if you listen to the hype today, it feels like it's just around the corner. So I suspect that's a little bit further away than the fascination with this futuristic tale suggests. And I think one way to sort of test this sort of concept and some of the others in AI is to pull out that old test that people have used for a long time in the regulatory space, the grandmother test. Would you be comfortable with someone in your family, especially your grandmother, relying on a particular product or service? And I just think we're a long way from a world in which we rely on bots to do particularly sensitive and complex things on our behalf. We just don't have enough oversight. The problem of hallucination, when they're acting on misinformation, all of these things feel like they're big problems and put this a little bit further out of reach than you might suspect.
Well, on that point, and I apologize for interrupting, but I think to just emphasize that OpenAI just released a kind of a new agentic product that's focused on sort of handing over control of some of your browsing activities and letting it do stuff for you. And I noted, to your point, in Sam Altman's announcement about that he kind of was like, we don't really know how this is going to work, and we know that it's likely going to be misused by the bad guys, but we because we don't know exactly how, we'd like you all to kind of test this and play with it, and then we'll sort of iterate and watch like how it gets misused. And he cautioned people to be careful, but it struck me, PR, to your point, that like that was a perfect example of something we would never do in financial services, not in a million
Well, it's
years.
worth asking whether we should be doing it anywhere. There's something about AI product development that we can talk about. And I think the arrival of AI has really disrupted the product development cycle as we've come to know it. It's long been analytical and data-driven in most major corporations and in most sectors. But product development is no longer something that a group of executives can draw up on a whiteboard and then execute against. You're really relying on the rate at which an algorithm changes and improves, and that's dependent on a whole bunch of factors. And some of it is this sort of crowdsourcing effect, that if we put large language models and Gen AI out before they're sort of fully baked, all those early users are actually training the model and improving it. One of the things I said when sort of LLMs first hit the market is every organization should pick its test, sort of like your use of the hangman example. Once a month or once a quarter, whatever makes you happy, ask an LLM to generate a Bible verse, a Shakespeare sonnet, a Jay-Z rap song. And it's not that they're going to be great in the first instance. What's notable about AI is how quickly they improve. That's what we want. That's why you're seeing these sort of maybe half-baked products put out a little bit too early in some cases. We can talk about whether or not you will see this in the AI world. There's a race to the bottom effect that one can worry about.
So, no, that makes complete sense. I mean, and maybe the learning is the part to the second answer, but what's an area where you think they're kind of underrated or we're not fully appreciating even right now what they can do?
I wouldn't give you a use case there necessarily, but I will give you one underrated concept in how we think about AI. And it's maybe three sort of underrated topics of conversation. I think the concept that is missing from so much consideration is sort of information asymmetry. Every really transformative technology creates them. There's a group of people who create this thing and know how to use it, and everybody else has to catch up. But with AI, the information asymmetries are gaping. The number of people who actually understand and can manipulate these models responsibly is actually shockingly small. So we have to be sort of thoughtful about what this means. Part of what we're grappling with in the age of AI is not just the speed of the transformation we're seeing, which is unusual and probably greater than anything that any of us has ever seen in our professional careers, but the inherent nature of the technology is also, for all of its promise, brings enormous complexity and challenge. So, I think we're going to talk a little bit about one way in which this asymmetry plays out between innovators, firms, and their regulators. Can regulators keep up?
Mm-hmm.
How can they do what they need to do in the age of AI? But we should also consider it more broadly. I was recently talking to an executive at a major technology company, and he said to me that he estimated at most there were 1,000 people in his firm who really had a deep understanding of AI, how AI works and where it's going. That's chilling. So this is something that's going to change and affect how firms are making decisions about their own businesses. So we should be mindful of that as a pain point for society, for institutions, and for people who use AI and have AI used on them. Now, 3 missing themes, and they're all going to be sort of macro risk management, quickly in the order of rough importance: public trust, climate, and scale. So public trust, I think, is sort of one of the big questions of our age. But rapid accelerating transformation of the kind we're seeing with AI really risks undermining any remaining trust even further. So when we see firms put AI models out that aren't stable, that produce misinformation, that create fake runs on the banking system, that actually poses a broader risk to sort of our ability as a society to move forward. And it will actually hamper innovation, people who are trying to get it right in the long term. So climate, building data centers the size of Manhattan is anything but cost-free.
Yeah.
Hyperscaling, all of these massive, massive models that we're talking about at the forefront of Gen AI and agentic AI require an enormous infrastructure drain in terms of energy and climate. It's probably not a coincidence that 2 of our most successful entrepreneurs, Jeff Bezos and Elon Musk, are both pursuing space exploration with an explicit climate rationale. And while I think it's cool that there are these now open weight models that can compress these massive amounts of human knowledge and understanding so that you can put them on a thumb drive, I do worry that we're accelerating our need for that kind of doomsday scenario playbook. Finally, scale, and this is something we'll probably talk about as a policy matter. The deregulatory ecosystem that we're in now sort of sounds like it should be automatically pro-innovation, but that's not always the case. And I think I'd like to see policy moving forward across financial services and beyond, really focusing on the need to retain and foster our capacity for startups to change the world, not just reward the biggest players.
Yeah, absolutely. I think all of those are great areas. Tom, what would you add to that?
It's always hard to add to anything PR says because...
I was just going to say, I'm sorry to make you keep going after her. My apologies.
So I think the 2 questions are where overblown and where perhaps underestimated. Well, I want to circle back to something that PR said about trust and the sort of grandmother test. I mean, on the one hand, yes, right, we're not yet sort of delegating all tasks to AI agents, but on the other hand, we did sort of start the conversation with the observation that we're all comfortable allowing AI to drive us around, and we don't necessarily think of driving as sort of a simple optimization problem, and yet my experience of being in a self-driving car is that it is vastly superior, certainly in urban settings, to a human-driven car. Now, I don't know that I'm yet quite comfortable, and I don't think that the proponents of self-driving are yet quite comfortable allowing cars loose on freeways, which is sort of interesting. What's right. And maybe it's the speed, the consequences of a misreaction, either false positive or false negative, going at those rates. But it again, right? Urban settings completely comfortable, and so I do that. I don't have an answer or explanation for why that's the case, but that it is the case seems interesting to me. The leap to sort of auto piloting seems also short, and sort of the combination of what we're seeing in the development of a vertical takeoff and landing aircraft and the possibility for change in fact, like the entire transportation infrastructure in compact, highly populated areas, like feels against the relative development in those spaces to be sort of underestimated. I think if I'm going to overblown, at least when we're talking about LLMs, I still struggle to see I have not yet seen what I would describe as magical demonstrations in the context of financial services. I think financial services are kind of overdetermined, and I'm not sure that that's a place where the strengths of LLMs really shine. I think there are other AI techniques that obviously do so. And again, right, the team at FairPlay and Kareem are probably best equipped to talking about them. But the family of things that we would call machine learning as opposed to large language models, has transformed underwriting over the course of the last 10 years. But I'm not sure that I understand yet where LLMs unlock sort of significant value in the creation and execution of financial services outside of perhaps sort of managing customer interactions, but that doesn't seem all that interesting.
I have one point of rebuttal to Tom just because I can't resist on the self-driving car. I feel like you're underweighting the essential joy of a chatty conversation with a New York cab driver.
Yes, I clearly, I will stipulate to my underestimation of that.
One of life's great pleasures.
One of those joys. Well, it is funny you mentioned that. I might be the only person on this podcast that actually hasn't had the opportunity yet. I live in Montana, so I have not actually been in a Waymo, so I have not had the experience, although I have seen them drive around a little bit. And I do think, I want to get into the financial services side. I know, Kareem, you had a question you wanted to ask about sort of how this is going to change things in financial services. Now that we've sort of level set on broad discussions of the future and kind of where this technology is kind of pushing things forward, Kareem, maybe you want to get into that a little bit.
Yeah, but before I do, I want to exercise kind of co-host prerogative and weigh in on where AI is overhyped and where it's underhyped. So
please do.
Maybe because I myself have been a little bit of a victim to some of the overhypedness. In theory, AI for financial trading should be awesome, right? Like the ability to basically just ingest an infinite amount of information and then quickly make judgments in ways that allow you to generate alpha consistently. And it turns out that that's just not correct, because markets are inherently hard to predict and non-stationary and subject to geopolitics. I say this as a person who's learned this the hard way, but if anybody doubts this, there was this famous case of Knight Capital a few years ago. For those who don't know, Knight Capital was once upon a time one of the largest market makers on Wall Street. I think they managed something like 3 billion trades worth $20 billion every single day. And one day they launched this options trading bot with a very simple mission, right? Just, maximize risk-adjusted returns. And minutes after flipping the switch, the bot went on a buying binge. Over the course of 45 minutes, it bought stock in 150 different companies totaling $7 billion. And there was only one problem, which is that Knight Capital did not have $7 billion. and they're buying the bots buying of stock was so aggressive that it drove up the share price of the equities that it bought by 30%. And Knight Capital couldn't pay those counterparties who had transacted with it in good faith. And of course, if they dumped the stock, they would tank the market along with it. And so Goldman Sachs, their prime broker, had to step in and bail them out. That 45-minute affair cost Knight Capital $440 million, and it was sold to a rival the following summer. So I think it's kind of interesting that it took Knight Capital 17 years to become one of the leading market makers on Wall Street, and it all ended in basically less than an hour. On the underhyped side, I'd be interested in Tom and PR's view on this, but I think the ability to democratize basic financial services, basic legal services for low and moderate income individuals, whether it's just kind of rote legal disputes, whether it's disputing parking tickets, disputing evictions. I think actually there's going to be a tremendous increase in access to the justice system for low and moderate income folks who maybe shouldn't traditionally afford counsel or good counsel. And I think that that's underrated and very exciting.
I agree with that. I mean, I think, and for sort of a couple of different reasons, and there are some working examples of these kinds of services out there. But one, what LLMs are good at, right, is generating language, right, and content. And most government services, the means of petitioning, right, is through syntax, the stringing together of words in a particular order, and so that LLMs, if you identify what the output should be, are good at generating content that fits the desired syntactical output expectation, and that's true across a range of government services, including things like litigation, access to benefits, disputing adverse decisions from government. And you see that, we've all, if you practice law or sort of law adjacent, you've actually seen this in generation of comments on proposed rules, both at the federal level and the state level. To the point that government agencies are then also, the other thing that LLMs are great at is sort of synthesizing data, right? And so you can start then parsing that volume of comments using LLMs as well. But yeah, Kareem, I agree. To the point that I sort of wonder, in connection with the big beautiful bill, whether some of the budget expectations related to the creation of new procedural obstacles to obtaining benefits do not achieve the budgeted expectation. In fact, because LLMs provide a relatively easy way to maintain and satisfy those kinds of bureaucratic obstacles. I'd say a second, and this is sort of a theme that I kind of invest in, but I'm certainly interested in. My experience is that government, with the possible exception of Social Security, which always makes like why we pick that program to want to privatize when it is like the one thing that the government seems to have designed and executed reasonably well, like relative to other kinds of government programs. The accounts that are embedded in BBB, the so-called Trump accounts, I think there are relatively low expectations about adoption. But again, right, like that's a place where LLMs can do a great job of making that program visible and then enabling others to distribute it. And so again, right, because all of the interaction is sort of syntax based as opposed to other ways that you get access to things. So I think that's a great point.
I can weigh in just briefly on that. I hope you're right, Kareem. I worry that we've heard these predictions of technology increasing access to justice, access to educational content and educational services, access to all kinds of things that we want, particularly to get pushed out to low and moderate income folks or people in rural areas with less nexus to some of the providers of higher quality services. We've seen it all before when we had the internet revolution. And I think as policy minds, we should try to learn the lessons of why we didn't achieve those aspirations, because I think they will help us in navigating to an AI future where we do a little bit better, not just in creating mighty companies and technological advantage and finding some capital markets efficiency, but also in solving problems of public good.
I'd be curious, Pierre. I mean, I think unambiguously there's more access to more information today than there was in the mid 90s before internet was sort of dramatically accessible to anybody who has a cell phone. Now, we might not like how people are using it, right? It's like TikTok as opposed to, imbibing articles on SSRN. But like, I think it's clearly the case that more people have more access to more information than any point in human history.
I don't disagree with that, but I don't know that all the predictions about improving access to high quality educational services, to courts and other specific aspects in which you might use and deploy information by virtue of technological enhancement or enablement came to fruition. There is certainly a tsunami, an exponential tsunami of information at everyone's fingertips. I think that also puts more skill on the ability to use information and differentiate what information is helpful and how to deploy it. And I think if we can solve those problems, we'll get to Kareem's vision.
Well, and this ties right into financial services, right? Because I think what you guys are describing about this gap between information and action is critical to a lot of different aspects of how financial services works, right? I mean, I've written before about the idea that, a lot of the business model of banks and in the business model of financial services is based to a degree on inertia, right? And not acting on information, or there being an opportunity to act on information that only a small percentage of the market does. And that sort of makes the economics work for everyone. It seems theoretically possible that, AI, and this kind of touches PR back on what you were saying about these agentic capabilities that were being promised, but maybe aren't quite ready yet, that there will be maybe the ability for systems to take action on behalf of customers in a way that we really haven't necessarily seen before in financial services. And I'd be curious to get both of your thoughts on, how these latest capabilities, separate from what we've seen around machine learning, particularly as it empowers consumers or customers, might change kind of the business models that exist in financial services. And Tom, in fairness, I'll go to you first on this question, and then PR can come in after.
I mean, the technology to make that possible and to distribute widely exists. And there are working examples, Ethan Block's Hero, Ynon Ravid's Albert incorporate some of these, and I'm sure there are others. We know that hedge funds have deployed, and there are bots that are sort of rampant across every DeFi exchange. I would say I don't think our sort of mainstream financial services system, and specifically banks, are at all equipped for a real-time, high volume movement of funds. And we know that in part because of the experience in dealing with SVB over the span of several days, right? And so, on the one hand, we know that technology can act quickly on information. On the other hand, and I thought this is what was sort of interesting about the demo that Kareem did and sort of described in more detail. Like, I don't think our financial system, and specifically banks, are at all equipped for that possibility. And maybe banking needs something like the introduction of the powers that were applied in the stock market, right, following the 87 crash, where you introduce things like circuit breakers and the like to sort of slow down capital flows. I mean, we haven't really seen it outside of the SVB context in what I'll call sort of retail banking, but I would say I also don't think that we're prepared for the deployment of those kinds of technologies. For what it's worth, I have thought that the collapse of SVB is a bit of a missed opportunity from a policy standpoint, that there should be some I think there should have been, and there maybe still could be, but it has receded far enough in people's collective memories that I think it's unlikely to happen at this point. But some kind of external analysis of the circumstances that gave rise to the collapse, and then the policy responses implemented afterwards, along the lines of what you saw with the Rogers Commission following the Challenger explosion. There is still no good minute by minute, second by second chronology of what put SVB in the position that it was in, and then why did you get the series of policy responses that you got, including, the FDIC creating a bank that was going to impose a haircut on depositors, and then the reversal over the course of the weekend that followed. Why did they let the bank open on Friday morning? Like, there's just a whole bunch of things that I don't think have ever been adequately explored. And the reason I raise it in this context is that was a flash crash of a bank. Sure. And the deployment of agentic tools that have the ability to move and act quickly on information produce the kind of flash crash risk that Kareem highlighted with Knight Capital. And I just don't think the regulatory infrastructure or even the skills exist within the banking system to manage and respond to that kind of thing.
Yeah, I mean, it's worth noting that banks are particularly vulnerable to these kinds of events, right? Because it's a trust-based business model, right? We live in this fractional reserve reality where no institution keeps 100% of its deposits on hand. Also because there's a great difficulty in the detection and response of these kinds of adversarial effects, right? We live in a very crowded information environment. Social media platforms are full of mis and disinformation. I think very few banks have information analysts or disinformation specialists, right? How many banks have done kind of wargaming or red teaming to account for these kinds of events? And of course, the costs are becoming wildly asymmetric, right? Like, you can, moving your money from one bank to another, as in the case of SBV, costs very little, whereas the effort, right, to invest, time to understand if the bank is really solvent or not, is considerably higher. So I just think it's worth noting that financial institutions are particularly vulnerable to these kinds of adversarial attacks.
Yeah, and it's particularly interesting in the context of SVB because, part of what made them, people focus on the bank for Silicon Valley, which they were, but they were also a really, really great payments bank, which is part of the reason that their systemic importance sort of outstripped their size. And so they had the capacity to wire at rates and levels that were vastly disproportionate to the rest of the industry. And so, whereas say First Republic just didn't pick up the phone, but SVB was busy wiring money out of the bank because that was what they were really good at. And again, right, I think there are some deep policy issues associated with something like this that just frankly have not been explored, and I think should be. And I say that, having read the Fed Look Back, written by he's still on the board of governors, but he was then the head of supervision, Michael Barr, and then California has its own report and various congressional reports, but no real, I would say, external to the banking system effort to unpack and understand how did that institution get to where it was, and then what happened as the events unfolded.
So I love the idea of autonomous agents that are empowering consumers in the financial services market and other markets. And I think if we look at financial services, traditional consumer protection regulation has rested on two pretty significant fallacies. They're well-intentioned fallacies, and we understand where they came from, but they're fallacies nonetheless. The first is that consumers read things, like required disclosures. And the second is that they comparison shop.
Mm-hmm.
If more of that happened in the world and bots took it on their shoulders instead of ordinary consumers doing it, you might actually get better consumer decision-making about what mortgage to use to buy the house you fell in love with. Mm-hmm. So there are places where I think bots can level the playing field to some degree. Again, I think it'll be a while before we get there, but I'm not without hope. I'm not all doom and gloom over here.
Well, no, I think that's a really good question.
I was going to say, you have seen that more in the context of sort of the lower end of the financial services scale. So, and this, I think it's unlikely that we would get through the entire discussion without referencing 1033 or some of the fights that are unfolding.
It felt unlikely, yeah.
Right, but part of the original inspiration for Section 1033 of Dodd-Frank was, in fact, to arm consumers with the ability to sort of police how their financial institutions were treating them. And we actually have seen the emergence of a whole set of providers, sometimes called earned wage access, sometimes non-recourse liquidity providers, that enable consumers to arm themselves with a service that protects them against their banks imposing overdrafts on them, right? And I think it's not a surprise, right, that large financial institutions that have succeeded in monetizing overdraft protection at the cost of to the consumer cost of $38 or more a pop are not happy that a consumer can provide a passive system with visibility into their account, and that passive system then can take steps to ensure that they have the money available in their account to avoid the implementation of that overdraft. For the higher order, higher dollar cost services like mortgage or management of one's retirement portfolio, I don't know, it seems not quite to have been implemented in the same way, and I don't have a good explanation for why that is, but it is. Maybe it's, I don't know.
Well, it is interesting, right? And it brings us to kind of another question I wanted to ask before we wrap up, which is, and PR, you referenced this earlier. I think there is this kind of strange gap between where these technologies start to get traction in the market versus where, from a policy perspective, we might want to try to proactively push these capabilities. And sometimes it goes in the same places, sometimes it doesn't. Obviously, any legislation like Dodd-Frank or regulatory rules that are built on top of legislation, these things take a while, and there's sort of administrative processes built into them that take a while. But, that all contrasts with the fact that, as we were saying earlier, this technology is changing at a much, much faster pace than it used to, right? And, Tom, you referenced, the 80s when we were dealing with, flash crashes and putting in circuit breakers. Like that was an era where technology moved much, much slower than it does today. So PR, maybe I'll come to you first on this, but I'd like you both to answer this question, and Kareem, jump in here too. How do regulators keep up with all of this? Is there any hope to like fixing that, or is this just going to be a problem that gets worse and worse as technology moves faster and faster?
So the speed of change in everything in our life is sort of, the defining, I think, variable. And it is a huge challenge for the policy community. I think they're suffering from deep gaps in understanding, expertise, scale of resources. It's hard for me to see our existing regulatory model being effective against Gen AI models of enormous size and complexity and that are changing quickly. I suspect the onset of AI will present us with the opportunity to really rethink regulatory structures and recreate them. I would predict we need to do it in a profound way, sort of fiddling on the edges of current regulatory agencies or their authorities isn't really going to get us to where we need to go. And I think we're going to need to get comfortable with more collaborative approaches. Self-regulatory organizations that have some sort of contact and nexus with government authority, standard setting from industry would be helpful at this point. There are a whole bunch of sort of public-private sort of collaborations to sort of set some norms and tech standards. We've seen some of it coming out of NIST here. There's certainly been policy making in other countries around AI that, we could talk about if we had more time. The one thing I would advise anyone using AI models to do, and I rarely say the financial services world should export its regulation because it's a land of belts and suspenders to nth degrees and often to no good value. Model risk management for all. We need foundational principles that lay down some guardrails, preserving space for innovation, allowing for that speed of change. But the genius of the model risk management sort of approach is that it's principles-based, it's flexible. And all it does is it says, you, firm, are responsible for the risk created by all of the models used in your business operations. And you're on the hook for identifying those risks, managing them, and monitoring models once you've deployed. And process-wise, what it creates is a rigorous, data-driven, interdisciplinary decision-making process about whether a particular model is fit for use and how to watch if it's meeting its intended purposes, whether it's malfunctioning, whether it's discriminating once you've deployed it. That baseline across sectors outside of financial services would give me a lot more confidence about the world we're moving into. I spent a lot of time looking at wildly overfoot, creaky, unstable AI models because there's this sort of notion that people have. I guess here there are also two fallacies. One is that building a great AI model, an amazing AI model with performance you've never dreamed of, is easy. You press a button, the algorithm does some stuff, and you've got this model that is amazing. In fact, more amazing than anything you could imagine because you're a mere human. The second fallacy is that every AI model is inherently amazing. In fact, a lot of them are really bad and really unstable. And even at the level of assessing performance, does it do what you want it to do reliably? Set aside all the other things we care about, like discrimination and misinformation and hallucination and learning to evade risk controls and oversight. There are a lot of other things out there. A lot of firms are deploying models that simply don't deliver the performance day in and day out in repeatable conditions once deployed. That is something that a model risk management for all could help us with.
Tom, what would you add?
I'd probably take and this is something I've talked about a fair amount, including in the sort of public interview context. I think we have to address and acknowledge what is being called sort of diminished state capacity, like our. The core governance regime in the United States embodied in the Constitution it is showing its age. And you can rewind the tape to 1787 and play it forward. Like, Constitution didn't function the way the founders thought it was because of the emergence of political parties. The compromise brokered by the Constitution related to slavery broke down, right, and precipitated the Civil War. And so we've had these and we've had other constitutional moments from Jackson to the Civil War to the progressive era in the late 19th century to the Depression and the administrative state. Like, we're clearly coming to the end of a constitutional period related to the deference of the citizen to the appointed, anointed, self-identified expert. And we need to come up with new ways of brokering compromise across the population and its political subdivisions. I think that I don't see how you create a government that is responsive to the speed of AI without some consensus, a more general consensus about what we as a nation expect the federal and the various state governments to do. And and so without that, I would say that I'm pretty pessimistic about developing a set of principles or frameworks to grapple with not just AI, but the rapid pace of change across society as a whole. So AI, energy, aviation. We haven't touched on quantum. Like, there are a whole set of pretty frontier technologies that over the course of the next 5 to 10 years will change how we live and work. And I don't think that the federal government, as it is currently structured, governed, or responsive to the people, is equipped to deal with that.
Tom, does the fact that the current administration includes a lot of technologists and folks from Silicon Valley change your view about that at all? Right? I mean, this is a president that has said he wants to roll out AI across all of the agencies. I'm curious, both of you, what your views are on that question.
No, I mean, because I think of this as a governance problem, not a implementation of government or policy problem. And I think, and I'll give you sort of a specific example, right? So, there's now a debate, and who knows whether this will occur, among several states to sort of redistrict off of the usual calendar, right? To further entrench what are sort of as perceived distributions of political power, both at the state level and the federal level. Like, those are the kinds of actions as between principal, in this case, the population of the United States, and agent, government, that suggest some kind of core principal agent problem that goes beyond the current ability of the principals to manage their agents. And like, that you have a group of people today who have an affection for technology is great, but like, there's no particular reason to believe that group of people is going to be there tomorrow or 2 years or 4 years from now. And so we live in this world of incredible volatility. And I think that's why I think it's a structural issue and not an implementation issue. And I think that we at some point have to grapple with we have to think about the structure.
I tend to agree with Tom's broad depiction of the speed of change across society as a bedeviling governance problem. I think it's as big a challenge for our regulatory structure as it is for our constitution. I have some friends who were born in 2000, and if you think about their lifetimes and what they've seen, they saw 9/11, they saw the Iraq War, they saw the financial crisis, pandemics, and on and on. And the acceleration of chaos in an interconnected world, the rate at which we surf one large wave of crisis to the next is undeniably faster. AI is just another one of those waves. I'm perhaps less resigned than Tom, maybe. I think we should still try to foster better approaches. I'm firmly in the camp that trying to tinker with what exists isn't the right way to go about this, that we should appreciate that a lot of norms have been disrupted and see that as an opportunity to try to think through how to do a little bit better than we've done in the last chapter. I'm not promising total victory or that we'll, in one effort, resolve all the problems of AI or all the problems of governance here or elsewhere. I don't know what else to do but try. And I do think what AI pretends to do to society and the world should call those of us of a policy bent to try to figure out, particularly those of us who believe in responsible innovation and believe that technology companies offering their wares at scale can actually improve human existence in very significant ways. How do we create markets and other infrastructure that foster the better version of AI rather than the worse? That's sort of where I am. I'm not promising, revolutions or immediate resolution of some of our bigger problems, but I do think this moment, the power of AI to supercharge discovery and learning and deploy human creativity and knowledge, does create an opportunity for us to take on some of our bigger problems and maybe even make some headway on them.
For what it's worth, I agree. Yeah, and I actually want to tie this back, Alex, if I can, to a question that you posed to a couple of your guests in an earlier episode. I mean, so you essentially asked, how do you help and think of, how does one in this current environment advise financial institutions of all stripes, right? Recognizing that we have an administration of a particular flavor, but they're leaseholders, not owners. And the answer is, right now, that's more difficult than at any point in my adult lifetime because of the uncertainty about our adherence to the governing framework that we have lived in really since, at least really since the Depression, right? And so the core message is, do what you can in the next 3 years to protect yourself against volatility in the governance and policy arena, which is, I think, part of the reason that you're seeing what I'll describe as a stampede to the banking regulators in the United States to obtain charters, right?
Sure, yeah. Get some certainty.
I think we can and should do better and find a way to reduce the government-induced volatility in the rule of law so that people can make predictions and make investments over a time horizon that is longer than 3 years.
Yeah, that I think is actually a great place to leave it. I'm glad we got to a place of optimism. That's always hard when you're talking about these technologies that are feel like touching the future, that feel like they're moving too fast for any of us to get a grip on. But I completely agree, both PR and Tom, on a case for cautious optimism and particularly kind of reaching for more certainty. So let's leave it there. I seriously could do this for another 2-3 hours easy, especially with all of the ideas that you all have been tossing out that I've been taking notes on. Hopefully this has been helpful to our audience. Kareem, I'll give you the last word, since you've been a wonderful co-host over these last 6 episodes. And thank you again for sponsoring this series. I've really enjoyed doing it. How would you like to close us out?
Well, Alex, thank you for the opportunity to partner on this. I think we're at a tremendously fortuitous time, given all of the technology developments affecting the financial services industry. It's been a great pleasure to have so many great minds join us over the last 6 episodes to grapple with the future of AI and the intersection of machine learning and financial services across many dimensions, whether it's customer acquisition, loan underwriting, regulatory and compliance, AI agents. So I hope the audience has enjoyed it. And for those who are looking to go even deeper on these issues, I hope you'll reach out to us at www.fairplay.ai.
Perfect. All right. Thank you all very much. This was fun.